First rates on your screen is a positive start. I would say a flat start actually. Reliance is 2650. Is it not moving? It should start moving actually. The breadth I think is looking incredibly strong. 1:5, 1:6. I mean that's a near perfect breadth for you. Let's come out of Reliance and let's look at PSU banks, which really shot up in the second half of trade yesterday, starting with Can Bank, BOB, and even State Bank of India. I think something's wrong with this graphic now. Can Bank is at 339. Let's look at SBI 599, struggling to cross 600 actually. That's the story for SBI. And then top it up with the Bank of Baroda, which is at 200. Tata Communication, well, they missed the guidance. Hello. And the stock's down. 1610 for Tata Com, 8 rupees down. Post those numbers. 1609 for Tata Com. Now let's look at Reliance once again, just to establish that last we saw was 191 rupees down, and it is still 191 rupees down. Ye kya ho raha hai? It's not moving. Graphics are not moving. I think Reliance is not moving. That's what
2650 is where it's currently stuck on at. But let's see, let's just give it time and some time to adjust there. I also want to check in on what Federal Bank is up to. Remember news just last evening, and this has been very newsy of late. Federal Bank, that is. That stock will just come up here on your screens. They've launched a QIP of 1,040 odd crore rupees. The floor price has been set at 132.59. So that's where Federal Bank currently is, higher by about 1.25% as we speak. Tata Com, we just spoke with the management. Let's see how they're reacting to the numbers, because the management is hopeful of achieving their guidance set, but in a span of about 3 years, 1% higher for Tata Com as we speak right now. DLF, Cybercity, Finolex, these are all earnings which have come out and in the green. Just want to look out for Shree Cement as well. They've got another letter for inspection from the Ministry of Corporate Affairs. 2.5% lower for Shree Cement as we speak right now. And L&T Finance, we're going to be chatting with the management as well shortly. The NIMs have come in at an 8-year high of about 8.06% and ROAs at a 14-quarter high. So these are a couple of stocks which are in focus. And of course, the darling of the market of late, Polycab. How can we forget that one? Or for that matter, even Indian Hotels. After the zing in the stocks of late, Polycab now 1% higher further. Indian Hotels at 403 as we speak right now. And then, of course, the entire PSU banking pack, be it PNB, Can Bank, the entire cluster has been holding up so well of late, though SBI has started off a little bit muted, flat for PNB as well, as is for the index too. But we're not complaining. A 19,800 start is not bad by any standard.
Oh, yes, indeed. No complaints whatsoever. That breadth for now skewed in favor of the gaining side. Kunal, let's get in a take. First up on the index, second up on Reliance Industries, and third, your first trade.
So again, expected start for the index, flattish move for the Nifty. So nothing major in terms of the change of opinion. We would still be holding on to the long positions on both the indices, Nifty as well as Bank Nifty. Today being the weekly expiry also makes it a bit more critical in terms of option trades. Now the opening trade which I would look out for would be on PSU banking stocks, and that will be PNB, Punjab National Bank. My earlier targets were closer to 62. We've revised the targets higher on the stock to 72 plus levels, expecting at least another 10% upside on the stock over the very near term.
Okay, Naresh, let's get in your thoughts. The fact that we're holding on to the 19,800 mark, it's sort of touch and go for now. And as the rates are settling in, you've got the broader markets as well that look a bit quiet. Views?
So overall, continue to be the same. The momentum is still strong and be stock specific. So Indian Hotels is the trade which I go with. The stock is breaking out, getting close to a new all-time high. So above 406 would get into much further momentum. So looking at a buy on Indian Hotels.
All right, gives me great pleasure now to bring on board the Mr. Maverick of Indian stock markets, Samir Arora. Samir, good morning. Thank you for joining us.
Hi, good morning.
How are things?
Things are good, and Maverick was the biggest hit of the last 3 years.
That's why I called you Maverick. That's why I called you Maverick. Your fund's doing so well that we should call it Maverick.
Very good.
Did you see the movie?
Yeah, of course. That was a long time ago. I've already seen it after that on OTT a second time.
At 55 plus, Tom Cruise can do that.
I
All
think
those
he's
stunts.
60.
He's 60.
I think he's 60, I think.
So we saw a magic trick from you last time,
But you
Samir.
know, right? His latest movie is not Maverick, it's Mission Impossible.
Yeah, of
Just
course.
Mission
FYI.
Impossible also.
Yeah.
But the Maverick was the name of the previous Top
Yeah.
Gun.
Yeah. Yeah, you were saying?
You
No,
want
no,
to
no.
discuss shows or the market?
No, okay, we'll talk markets. But right now, I'm just
Okay.
every time Samir comes on the channel, you got to talk about so many things. So Samir bhai, last time we requested you for a magic trick.
No, but you have to tell me before. If you had told me yesterday, I could have come to office with one. I have a few here and there small ones, but I'll send them via Twitter.
So next time we look forward to a magic trick from
Okay.
Samir. Okay, so you have to shake your magic box and take out a stock tip, which could be a trick for everybody. What would that be for the day?
No,
that
we
you can
don't
do
do
right
like
now.
that.
You don't need to prepare for that.
We are a regulated entity. We only talk of big picture.
So let's talk about the big picture. And the big picture is that flows have turned and flows are looking very strong. When you speak to some of your investors and your LP associates, are you getting a sense that the liquidity reversal which has happened from April onwards, it's real and it's here to stay?
100%. And let's not call it liquidity reversal because the previous trend was only like odd in some sense, although it happens every now and then. But generally, FIIs are buyers. As in the last 20 odd years, they would have been buyers in maybe 16 of those years. Now the story is on two legs. One leg is that people are, say, frustrated with China or whatever, and they have really done badly investing there. And the second is that separately, India has a good story to tell. We don't want it to look like a story that we are getting money because you guys don't know what to do with your money now that you find China unattractive. But that, hey, separately, India was doing well. You wouldn't notice it for 2-3 years. Actually, India has done well over the last 5 years, 10 years, 15 years, 20 years, and 25 years in dollar terms. But okay, now you are having these two parts of the story, and that is why this, I think, will continue for a long time or reasonably medium time.
So what happens now? Flows are strong and markets are perhaps fairly valued. So are we likely to see a situation where excesses will get built up?
Well, first thing is that it's fairly, most of the time you're supposed to get fair value only, because when the valuations are too attractive, then mostly it is happening because the flows are scared. So here the simple story is that we have had in the last whatever number of years, if you take a slightly longer period, about 13-15% INR returns. And here for year to date, it is maybe around 9-10%. So it's not way out of line with an annualized number of 15 odd percent. And secondly, if you also add last year, then the number is actually much lower because last year it was sort of flattish. And if you took it in dollars, it is still lower than maybe what it was in December 21. And during this time, India has done a few things which make it relatively a good place, whether it is to do with inflation or the fact that our current account deficit is reasonably low so that we may going forward expect a lower devaluation. And then we have done these 2-3 other things that our fiscal deficit is not so out of line because we didn't spend so much money post-COVID to stimulate the economy. And in this meantime, you got more frustrated with China and the US has done well, so on and so forth. So for some time, you can get a little bit more than fair value. When a fair value comes, it is because there have been periods of undervaluation or whatever is the word, and overvaluation. So fair does not come just that, okay, fair and the story is over. You have many periods where it could be a little bit overvalued, but why should it be? The earnings growth for most of the companies are coming out okay. So if you get that earnings growth in the price or in the market over 1 year, that is also a good enough return. We don't need to re-rate the market.
Samir, you're not doing magic right now, but you've done a lot on Twitter, reading about your tweets on inflation, concentration, and even AI. And I'm just curious with this digital adaptation, how you're looking at a lot of these global tech stocks versus what we have back home. We know, of course, about your investments, but just curious as to how you see the overall story now play out from here on. So many IPOs as well. Has anything caught your eye?
So in the IPOs, we normally don't buy because these IPOs, if they are good, they get oversubscribed so much. But some of the IPOs, including this drone guy, I think is super highly overvalued. Let's see. I would think that some of these should fall 50-60% before anybody should look at them. But it will be a good test of how much speculation we can do in life, because of manufacturing companies, valuation is not supposed to go up 10 times over a 10-12 month period, as if during that 10-month period somebody discovered a cure for cancer by mistake while doing some simple manufacturing. Normally these very steep changes in valuations can happen if you discovered some magic formula along the way. Otherwise you were supposed to make X machines and you made X plus 25 machines. You're not supposed to have valuations up 10 times because willingly 10-12 months ago you raised money at 1/10 the valuation. So I just, big picture, I reject those things. On this US tech versus Indian tech or whatever, the US tech also, if you see, the guys that are going up are seen as direct beneficiaries of AI, or companies which is like Microsoft types, or companies which cut costs and went back to focus on what they were doing and gave up on their bigger projects like Meta or even Google or Alphabet, that is. So those stories are a bit different from our story, where in India we want the world to be doing new things and more things, and AI may actually for us be maybe neutral-ish in the beginning, but in the end has to be negative. But more than that, my idea is that all these companies are saying that we have poor results currently, but in future we have a lot of business we can see in the future. Because many clients are interested in bigger projects. So I can't reconcile to that a company is saying to its service provider that, hey, I don't want to do any business right now, but here, take this big order. So what that means is that the big order most probably is of a different kind, which means it is like a cost takeout kind, which somebody is committing. But those projects by their nature are lower margin. And because they are longer term, by definition, even somebody giving you a 7-year order instead of a 5-year order in writing will want a discount for the fact that he's committing to you a bigger order and a longer tenure order. So in the end, this might be good, but right now, every one of them is disappointing, and every one of them, the stock price is going up, and we don't like this thing.
Amir, we got a unique listing today. When I say not listing, but a price discovery of Jio Financial Services. What do you think would be the medium to long-term implications of this? Because Reliance is giving birth to a business which is backed by technology, which is backed by scale, and they have advantage of data and reach. What implications do you think this could have on the lenders, the distributors, and even for that matter, platform companies like Zerodha and Policy, PB FinTech?
So I don't know much about how it will make such a big difference to Zerodha type, but to the financiers it will, because these guys are themselves selling 50-60% of smartphones or phones, and they are selling their own televisions and everything else through their own network. So easily they can bundle financing along with it and directly say to the guys that if you are approved and you are on my list, then this is your price straight away. The customer doesn't even have to make a separate thing of first buying a phone, and then even if it takes 1 second to find a financier on an app, that can come packaged in, that we will just check your name, and if your name is in our list, you can have it. So it'll make a big difference. The only thing is that right now we didn't know how to value it on a price to book, because their book has a lot of Reliance shares in it. And so should we treat it like cash? Because if it is like cash, then you earn some 6-7% on it, and that can be another support to the stock price in terms of many years of other income. But if it is in form of share, then that became confusing. So we are also seeing how this price is discovered, and then we'll decide what to do.
As a long haul investment, do you think this could be one of those stocks which institutional investors would like to own for next 5-7 years?
I think over time, 100%. Over time. It's just that in the beginning, if it gets treated like a finance company already in business and the price to book is high, then we might back off for some time. Yeah, let's see.
Current juncture, after the run-up of about 15% on the Nifty, 20% in mid and small cap stocks, 25 plus actually in small cap stocks. What would you say is the most overrated sector and the most underrated sector?
So first of all, it is wrong to look at it as a 20% rally. You should look at it year to date, which we mean by that calendar year to date. The market is up 9%, which is in line with a normal good year. How I say that is that if the market is up normally 13-15% per annum over a cycle, that cycle has some positive years and some negative years. Mostly the negative year which comes is a big bad year, like you are down 25-30%. And then that year is so bad that it takes away the returns that somebody made in the previous year. And therefore you make 5 years returns over 7 years. I mean, it comes out over 7 years, let's say a cycle or 8 years. So in the good years, you're supposed to make more than 14, 15. That is how the annualized number over the good and the bad years will come out to be that. So right now it is in line with a normal year, following actually a bad year. So nothing is there. Now, in terms of overvalued and undervalued, we thought that this quarter that the IT results will be bad and the stock reaction will be bad, and then we would have felt a little bit tempted to buy it, saying maybe all the news is out there. But the reaction of the market made me feel that I can just continue with what I have, which is to continue with financials and consumer and ignore IT, because I have a certain framework, and that framework, I don't believe that the Indian market discounts things 2 years ahead. We can keep acting as if we are long term. But for us, it has worked for 26 years or 27 years. Results are bad. This year is bad. Next year is okay, but these stocks are not so cheap that you buy and forget them, saying, they are like in the dumps, so just let me buy them at a bad time. They are still trading at higher than market valuations for numbers which may turn up in the second year, for which a bet can be taken, but only if they are trading well below their average. Otherwise, what is average if everything is average or above average? If the valuations are average, then sometimes those valuations are below average, and we want to know when are they below average. They should be in these situations. So therefore, for us, the sectors will remain the same.
So Samir, you're sticking you're sticking to financials, you're sticking to consumption. Why don't we talk about one of the largest holdings there, HDFC Bank, now with things having changed with the Mammoth merger? What's the outlook?
Well, we have it forever, so our story doesn't change. It needs a little bit of a sort of a cleanup or new people coming in. But if we think that foreign investors are coming into the market anyway, that the foreign investors are, as we said, the flows are coming in, they have no choice but to also buy HDFC Bank. It's in their index now at 6-7%. But more than that, it is easy for them to justify buying it because they'll say it has underperformed for 2-3 years. And everybody who comes in buys 10-20 stocks. So literally every new fellow will have to buy it. Similarly, nearly every new money raised in India in mutual funds will have in their benchmark 10% or whatever in this bank. So unlikely that not everybody will have 8 to 10% or 6%, but nobody's going to have 0. So even if you say 7% of every new money raised in the mutual fund industry in these big flexi cap, this cap, whatever cap, has to go in first by HDFC Bank, it'll sort itself out. Fundamentally, it's anyway doing well. Therefore, I don't worry about currently if somebody has to sell because it is more than 10% and all that. Over time, there will be enough flows into it. And fundamentally, everybody agrees that it is doing well for the last 2-3 years. Also, it has done well and become cheaper during this time. And that is an easier one to say buy and forget.
Samir, now financials is a core for everybody. It's a matter of whether you are 30% or 35% or 40%.
Correct.
And rarely we've seen that consensus of this magnitude really creates a strong outperformance. But you also like financials. So what's the underlying thought here?
So I will tell you, first, it has not caused outperformance this year. It did not do it in 20. It did not do it in 21. If you see the bank index, it was at that time PSU banks which did well. And even in 20, I think, because I remember writing that our top weight, the index did worse than the market, but we did better because we had ICICI Bank and State Bank. But as an index, it did not. Secondly, for how many years have we known that in India is a story of IT and banks? Forever, right? Banks we have known because they do better than private bank. Than state-owned banks was a story for 20 years. It worked for 20 years. IT, forever we know that IT India is cheap and, that people come to India, and forever we knew it, and forever the stocks did well. If you look at it from 90s, only the same story. Never has the story changed in either IT or financial. So the point is these things, everybody consensus, there is no sick. For how many years have we known that Google is a monopoly in search, and literally forever Google has outperformed? If you see all these new guys who talk about buying only the successful companies, everybody knows they are successful companies, and you buy them and you still do well because you have to bet on their delivery part. You have to bet on their longevity part rather than on everybody believing. Plus, as I said, I don't believe that everybody who has to buy has bought it simply because we are whole betting on the fact that now there'll be new FII money, which for around 18 months, that is half of 21 and 22 together, I think some $35 billion were sold by FIIs or something like that, in which 30% would have been financial. So they would have sold 10 billion, of which they would have sold 2-3 billion of HDFC Bank, which is why HDFC Bank foreign ownership went from some 73 or something to 60, which is why everybody was betting that it would come into the MSCI index. So if it was consensus, right now State Bank is down for 6 months and HDFC Bank is up, I think 1% for 6 months. And the other one, ICICI Bank, it's up 3% or whatever. And ICICI Bank is up 9% in 6 months or whatever, 6.5 months. So nothing to worry. It is, if the numbers come, if the environment is for them, then whether you are consensus or not doesn't matter, because more people are to A, join and be beyond a point. For 7 years, for example, from 2013 to now, HDFC Bank was not in the MSCI index and foreigners were the main buyers, and it was removed from the index. It used to be 7.5% and still it outperformed.
Okay.
Even including those last 2-3 years that it has not.
Great, Samir. Always a pleasure having you on board and getting your views on the market direction as well as stocks. Magic tricks next time. We're booking and blocking our dates from now. Okay, no magic on the markets for now. It's just a flattish day of trade. So just an update is that we're quoting around the 19,833 mark. Ditto for the broader markets. Pretty quiet. And let's get straight then to the big voice and the big exclusive. It's none other than the Power Minister. He speaks about how the industry has, seen a sharp turnaround. What is the outlook now? Will it see more of a re-rating? What are the next steps that the government will take to take the industry to new heights? We have Mr. R.K. Singh sharing his thoughts. Listen in.
Mr. Singh, what the 18-hour viewers would like to understand is the vision of the government in terms of the fresh capacity addition. Now, you alluded to the numbers that 50% broadly is thermal, next 50% and additional is coming non-thermal. So can I say that the Power Ministry of India is now going to be focusing on and perhaps giving more push to new sources of energy, and thermal will take a back seat?
Absolutely, Nikunj. Right now my non-fossil capacity is 42%, and by 2030 it will be 65%. So we are transitioning at a faster rate than anybody, even though our per capita emissions are one of the least in the world. Our per capita emissions, Nikunj, is 1/3 of the world average. And our per capita energy consumption is also approximately 1/3 of the world average. So basically we are the least polluters on a per capita basis, and yet we have one of the fastest energy transitions in progress going on as far in the world. We've also achieved another NDC, And we had pledged that by 2030 we'll reduce our emissions intensity by 33%, and we've already reduced it by about 30%. So we'll again achieve that target well ahead of schedule. We are a world leader in energy transition and climate action. Make no mistake about it. Now, nobody talks to me about the need to do transition. I tell them that, look, this is what I have done. Now tell me what you have done, and they can't match what I have done. So they are generally on the defensive.
So in this heavy lifting of energy transition, how much of capacity addition, and I'm talking about non-thermal capacity addition, you think will come from, let's say, an NTPC and other state, generating utilities?
Some capacity, you see, the capacity addition is coming from both state as well as settled utilities, and similarly, this capacity addition will come from both. What we do is, actually, you can call it as capacity addition by both together, because, for example, in solar or wind, what happens is that we have our agencies like the Solar Energy Corporation of India, the NTPC, etc. They hold bids, and now those are national level bids, and so they come to a rate that, okay, the solar will be supplied at 2 rupees 30 paise or whatever, or wind will be at 2 rupees 80 paise, whatever, and then whichever state needs that, they sign an agreement called the power purchase agreement or power and the power sales agreement. So that capacity is actually owned up by the state. The power goes to the state. The consumption is all in the state, all by the discoms. So it's actually a joint sort of effort whereby we are doing this. But by and large, the central government is taking the initiative. What we have done, Nikunj, is I'll just finish. Nikunj, what we have done is we put in place a renewable purchase obligation. So we have laid down trajectories, and we have said that, look, the country had made a pledge, under the United Nations Framework on Climate Convention. That pledge has to be met, and this is your share. So this much energy which you consume must come from renewables. So that is happening. And a similar sort of mandate will be put on also others. Those who are either who have captive generating units, or those who are open access consumers, they will also have this mandate, so that the country, when it has made a pledge, will achieve that pledge. In fact, will be more than achieve that pledge. So the initiative is taken by us. We conduct the bids. We tell the states that, look, this is this quantity of renewable energy, or this is the percentage of renewable energy which you must have. So they sign the PPAs, etc., and that is how we are growing.
So, Minister Singh, just some follow-up questions. From generation, I would move to essentially now into distribution. While the T&D losses have come down, Discom efficiency has increased, but since you are referring to global averages, I guess that is one area where the global averages are much, much better than what India averages are. So the puck is moving in the right direction, but I guess we have a lot to catch up there.
Yes, yes.
So when do you think we will be able to improve on it?
We have done a lot. You can put it that way, Nikunj. Now, so what we have done is that today, the AT&C losses have been brought down to 16.5% and they used to be hovering around 23%. So it's almost 6.5% reduction, and we believe that the next year we'll see a further 3% reduction, so 12-13%. All my discoms are nearly viable. The only one problem which I have to solve, of course, now is the legacy sort of losses. So we'll look at that as to how those legacy losses the states will fund. Now the ACS ARA gap we have brought down to 15%, from 68 paisa to 15 paisa. Can you believe that? So the cost between the gap between the average cost of supply and the average revenue realized has come down from 68 paise to 15 paise. That's what we have done. I mean, the sector is totally different, Nikunj. It's viable now, and it will get more and more profitable as all our reforms, sort of take hold. We made everything conditional, Nikunj, in the sense that, okay, you want grants from the center. You have, if you are making a loss, you tell us how you are going to reduce your losses, get your state government's commitment to it, take the grant. You want a loan from our institutions, if you are making losses, we will not give it to you. But we will give to you if you work out a method for reducing those losses, get your state commitment to it, and then come to us with that. We'll give you that loan. So everything is now conditional, Nikunj. I mean, there's no free lunch anywhere. That's what we have made the power sector. You consume, you have to pay. You don't want the consumer to pay, you pay. The government pays. That is from the budget, whatever.
So let me draw your attention.
And if you have announced a subsidy, you had better pay it. Otherwise, somebody will have to.
No, that is so true, sir. And it is very evident that the sector,
Yes,
which
Nikunj.
in a sense was on a backseat, is only coming back because the viability for the entrepreneur to invest and generate return is there. And that will only happen when the demand and the supply equation is rewarded for somebody's hard work and capital commitment. But my next question, Mr. Singh, is the Electricity Amendment Act.
Yes.
What is the status on that? Because that, in a sense, would be the mega reform for the sector, where more and more discoms would be privatized, smart metering, etc.
Now, Nikunj, what we have done is, you see, as far as that bill is concerned, that bill is the standing committee. So I have had a couple of meetings with the chairperson of the standing committee. He says that they'll be giving their report soon. But what has happened, Nikunj, is that only one major change is now awaiting that bill, and that is that multiple distribution licenses working in the same area of supply. This has already been provided for in the Act, in the 2003 Act, but it's not come to really come into effect outside of Bombay and a couple of other towns because of one provision there which needs to be removed. And that provision says that every distribution company will distribute power, electricity through their own network. Now that is foolish, because that network will be common and different suppliers will use the same network and pay for the use of the network. So that's the only change which is pending that bill. All other changes which we wanted, we've already brought in those changes by our rules. The rules which we have promulgated have brought in these changes. The prudential norms which we have laid down have brought in these changes. So my reforms are well ahead. They have progressed very well. And as I said, Nikunj, today the power sector is very different. And you have rights. I mean, nobody can overcharge you. We have put in as a consumer, the distribution company cannot put any unnecessary hurdles on open access. So anybody wants open access, they will get it. That means they can buy from whosoever they want. Any industry, for example, can decide that, okay, the power supplied by this distribution company, the cost is too much. I'll get power from somebody else, or I'll generate my own power somewhere captive. Great. Or I will buy power from a developer which is situated in Rajasthan or something, grant me open access. That open access has to be granted. And the earlier charges on open access, they have been rationalized, and they'll be further rationalized, so that everybody, I believe that we are free citizens of a free country, and we have the right to decide as to where we'll buy electricity. That is the mantra.
Mr. Singh, one of the most underappreciated aspect I just want to bring out for our viewers is that last 12 months the world has gone through serious energy crisis. What's happened in Europe, what's happened in US, but in India, the energy and the electricity rates have not gone higher, something which we don't appreciate, even as consumers and even as market commentators. So I just want to bring this point out for the benefit of our viewers, that what happened in the world versus what is happening in India because of the war situation, I think is fantastic. So, Mr. Singh, I want to just come to a very basic point, which is that
Thanks,
what is your understanding of the power demand? Because as India will grow, per capita need will increase, industrialization will happen, India is moving towards manufacturing. What is your assessment of how the future electricity demand will move, and what are the plans in place to ensure that the gap does not grow?
Yes, Nikunj. Our demand is going to double by 2030. Today, my established capacity is about 421 gigawatts, 421,000 megawatts. By 2030, our established capacity has to be 800 gigawatts. So that's the capacity addition which we have to do. Now that, the bulk of that, we have to get from renewables. And that's our plan. Because we are a signatory to the United Nations Framework on Climate Convention, and we've made pledges. Now, so we have set targets for ourselves for capacity addition. That's about 50 gigawatts. We'll carry out bids for about 50 gigawatts a year. That's why we have emerged as the most attractive destination for investment in renewables. We will also need storage, because without storage you don't have round-the-clock renewable energy. So we have kick-started the hydro sector. We have kick-started the pumped storage sector. So the pumped storage sector is also booming. And we came out with a PLI on battery storage. We'll come out with another PLI on battery storage, so that the battery storage and pump storage and hydro, all these will go to make round-the-clock renewable energy along with solar and wind hybrid. Plus, I have about 50,000 megawatts under construction of thermal. So that will also come. I think that this mix should be able to do it. I may have to start, and if I tell the world that, look, if I have to add thermal, I will add thermal. I mean, don't be any doubts about it, because for my priority is to make sure that we have enough power to power our growth. We are growing, so we'll have enough power to power our growth. There's going to be no compromise in that. Of course, we are one of the lowest emitters in the world. We'll continue to be that. And we are also the country which is one of the fastest transitioning countries. So by and large, we are taking care of the climate. But if I need to add more thermal, I will do so.
Mr. Singh, as member of press, we're always critical in nature and we like to find the fault lines. But all I can say is that last 2 decades of tracking the power sector, this is a sector which indeed has seen maximum changes. You made the impossible look easy because of government policy and future planning, and the entrepreneur now is ready to invest and the consumer is happy because prices have not gone higher. So really appreciate your time, and thank you so very much for gracing the channel with your time and your presence.
Thank you, Nikunj.
Okay, that's the word coming in from the Power Minister. And I think the key thing that the market is really looking out for right now is at the bottom of your screens, Reliance's pre-open rate has settled at 25.80, which means that the discovered price for Jio Financial Services, that stands at 261.85. And that means that's actually much higher than what the market also, Nikunj, was anticipating, right? This is not the number which was floating around for Jio Financial.
No, much higher, much higher. Yeah. Good 100 rupees higher. Yeah. This is 250 rupees in the bag. There's 250 rupees in the bag. That's almost a 10% move in Reliance, which you got, because of it. Yeah. This is something which nobody anticipated. And when you say, if you really can hold on to, let's say, Jio Financial Services, the conversation which we had with Samir was that it's a business which has potential, scale, skill, ability, pedigree, data, platform, everything. So it can be a sizable, high growth business for many years on that kind of a scale. Even though it is coming from the house of Reliance, it has the ability and the sufficient condition in the environment where it can be really scaled up to a different kind of a size. So Sharad, when we spoke to you in the morning, the general view at the dealing room where you are, the Prabhudas Leela, the dealing room, was that the price discovery would be in and around 160 to 180. It's at 260. That's a good 100 rupees higher than what the consensus number was.
Well, yes, that is what we are getting in. And let's just go ahead and talk with the traders over here when it comes to the settlement price, what it is and what it means for Reliance. So over here, sir, if you could just explain us what the settlement prices were across the exchanges and also any differential is coming.
Yeah, so on NSE, if you see, it has settled around 2580, whereas on BSE, it is just 9 rupees above, which is like minuscule. So somewhere around 2580 is the settlement price. And so the difference comes to 261.85, which shows that market is really enthusiastic about the Jio Financial Services stock.
So a lot of action coming in, and do remember from 10 o'clock onwards, the trading will start. Back to you.
Right, Sharad. So it is at 260 rupees. Now, why is that important? Well, that is important because if you look at the construct of Jio Financial Services, the treasury shares of Reliance have been moved into it. That gives it cash and that it gives it balance sheet size. This is a business where the scale, size, ability, everything will be at play. So that in a sense will be the differentiating factor also for this one going forward. So I think the price discovery in Jio Financial Services is certainly way above than what the market was expecting. Now, this is not the end of the road. It is not that you've got a land bank, or you've got a dividend, or you've got a company which has done some buyback. This is a business which has got incubated. And environment, pedigree, ability, and technology will enable that there is a serious possibility that this business could be scaled up. So, for a long-term investor, this is not the true potential. I mean, the true potential could be starkly different than what the current value is. So for Reliance shareholders, this is something which nobody was anticipating or expecting. If one looked at the sum of parts story of Reliance, before this entire thought of demerger was announced, well, they have the core business, they have the Jio business, they have the retail business, and they have the treasury shares. The treasury shares are getting unlocked because of this. B, the other sum of part businesses never included this kind of value unlocking, which in a sense is completely true blue sea to so to speak.
Yeah. And I mean, historically as well, Nikunj, we've seen that when Reliance enters any business segment, the kind of disruption that it brings about for the sector, I'm really just wondering, I mean, I know it's not an apple-to-apple comparison. Telecom and, branded retail is not the same as financial services. And given how diverse this sector is, it's not a small player or a few players market. It's a very big sector with a lot of players in there of all shapes and sizes. So I'm just wondering what a entry of a player like Reliance would actually do to the face of this sector then.
So let's look at the retail example and Jio as an example. Reliance starts Jio, they change the dynamics of the telecom sector, they become a force and the others are forced to kneel down with their competitive pricing. In retail, the turnover of Reliance Retail broadly is 2 lakh crore. And it is not that they've had a disruptive impact on the retail industry per se. It's not that the Kirana wala has gone out. It is not that it's having an impact in per se the entire supply chain. What they've done is that the unorganized market has moved to organized market. What they've done is that the Indian retail consumer spend was moving higher. Indian economy per capita was moving higher, and this was a mega trend where they were able to gain some market share with a very organized presence. That's financial services for you. There are a lot of places where the size of the opportunity is large, one. B, there are a lot of pockets where the supply, the entire distribution platform will bring in more efficiency. And typically when a large player like Reliance kicks in, you actually would see the ultimate beneficiary here would be, like in Jio, ultimately it has been the consumer. Ultimately, it really has benefited the digital prowess of India and ultimately something which has really taken India apart. So I don't think this is going to be a disruptive for the current incumbents because the size of the pie is so large. But yes, it will be a very different experience. Where it may change things would be in the area of distribution because that's where margins are fat. Insurance, wealth management. Those fat margins in a sense will completely get challenged because of this. But it's early days. I mean, just because it's Reliance does not mean they'll get everything right. And there is a probability and a possibility that they'll move in the right direction. But it's going to be on a very organized matter. Not like Jio where they came out with such advantageous pricing that they were able to change the dynamics in less than 12 to 18 months. I don't think it's going to happen like this. It's like a long haul trend which you need to bet on. Is Sushil Bhai ready? Can we go to him?
He's gonna be there in a bit, but just at that price, of course, it is fairly lucrative for the shareholders. We've also got Kunal then right back with us in our studios. And Kunal, your thoughts?
Yeah, very nice, I would say, price.
Take, I guess.
Yeah, so I had to actually double check whether it's actually 160 rupees or 260, but then I think it's a good price which the markets have discovered. Hopefully, I think that should not impact the price trends for Reliance Industries net once it lists, but I think it's again a very good price for Jio.
What do you do with Reliance on the charts now? I mean, how is the chart looking?
So we'll have to see how the prices get adjusted, whether the prices...
Let's say 2600 is the price for Reliance at 10 o'clock. It will start trading, right? So what happens to Reliance now? When ARM has been taken out, what happens to the chart patterns?
Well, the charts, they get skewed a bit, but then, it also gets adjusted. So like what happens in dividend, for example, if a stock goes ex-dividend, the charts also get adjusted. So we need to see whether that happens
Bonus
for...
also start, आधा हो गया, but
Yeah, so you have to reduce the prices for the historical basis for the chart part. So I hope it doesn't impact the charts as such.
Sushil bhai, good morning. Thank you for joining us. Did you manage to reach on time today or again trapped in rain?
No, I was here. I did an interview with Swadesh first.
Okay, so how did you manage on time today? There's red alert in
I
Bombay.
come in by 9:15, 9:30, but today I left before 9 because BKC is always a traffic jam after 9.
Okay, that's a trick. Start early. Don't be lazy.
Yeah, but then my office is little next to Maker Max City, so it's nearby that way. I don't have to enter into BKC fully.
Great
Off
to
the
hear
bridge
that.
and office is there.
Great to hear that. Okay, what do you make of Reliance Financial Services price discovery? 260 rupees. A good 70-80 rupee higher than what the consensus view was.
It's the retail frenzy which you can see. I don't think so institutions are buyers at this price.
Why would you say that? When you say this price, what is the relative comparison you are doing?
See, the thing is that if people are building 3 times, 4 times book on the book value which is transferred to the arm, is not the real way to look at the business, no? Because the business will be built. The foundation is led well by transferring treasury shares and net worth and enabling technology. But ultimately, business plan, expansion, customer acquisition, average ticket size, what segment, all that will have to see. So now you put up Bajaj Finance, I understand, 5-star, Poonawala, credit access. Ours is not it's a housing finance. The rest of the companies are mixed business. Reliance maybe Bajaj Finance is almost 40,000 crores of housing book is 80,000 crores. So you'll have to go segment wise. So digital lending is something what you'll have to look and then decide.
Reliance, by the way, now in the normal trading has opened at 25.89. So the Jio Financial derived value stands at 252.85. Kunal, a fresh high for the adjusted value or the combined value?
Yeah, I think fresh high for Reliance. I think even if you look at this 20-30 point opening, gap up opening, it's a fresh high for Reliance.
Okay. Sushil bhai, now what happens to the Reliance stock per se? Because there was a sum of part valuation which was given to the treasury share. That has been unlocked beautifully. It goes back to the core business now, which is refining Jio retail. Now, is this an indication that they've unlocked the treasury share, which means the next 2-3 years they'll start unlocking other businesses also? Because that's always been the good old buzz, that when will they list Jio platform, what will happen to retail?
Thanks for having me on the show, Nikunj. My personal thinking is Reliance oil to petrochemical and gas business is on a phenomenal run, specifically the new discovery which is commercialized. So value that separately, which will remain the standalone always. Retail will have a separate listing, whether it happens in 1 year, 2 year, one time will say, and what is the India story at that time. Looking at the current scenario, it may happen earlier than what is being thought about because the success what Jio Financial has got and what the market price of Reliance is indicating. Second thing is telecom is also on upward swing. And once the 5G rollout is near completion, Reliance would look at monetizing because Reliance has indicated everything what is potentially going to happen there. The business plan and the retail and Jio both are known to the world. How India GDP, that is whether 3 trillion is 5 trillion or 6 trillion in next 3-5 years. How is per capita income moving? Because it's a India consumer place. So whether you look at telecom, retail or oil to gas, everything is consumed by consumer. That's the story. So if India's story on a consumer is going to be good as what is being made out on per capita basis, consumption story, I think it's bound to do well. And elephant dances at a time. It can't run every day. So I think the story will emerge again on the demerger. We may not hear much about it in the current AGMO annual report, but sooner or later it's bound to happen, and it may happen earlier than what the street was estimating. I think the patience of the last 3 years is being tested. Next 3 years would be interesting from Reliance perspective.
So when the stock will list of Jio Financial, I think in middle of August, assuming that it will list at 260, that's a discovery price. Would you advise our viewers that they should sell it when they get the shares in their demat, or they should simply keep it?
So the shareholders will have enough view between AGM and the current quarter result, what they indicate, what kind of plans they have, what is the testing pilot book, what they have built as on today in July, what businesses they will acquire in, whether they do wallet business, they integrate the payment bank, digital broking, asset management, all kind of fintech services, what all other competitors are doing. As Reliance ready with everything, then you'll have to decide sum of parts and ascribe a value to it. But as on today, it looks expensive because people are valuing the treasury shares at the market value fully at 100%, which you don't give in other companies. And the balance business is being almost put at 4 to 5 times net worth. So that overnight you might have sound footing where the foundation of a building of the tallest tower of India is possible. But that tallest tower to construct, Mukesh Ambani, will also take little time. So you can't say that he should achieve overnight and then not have the quality which he always builds it. So he believes in quality, which will take time. So patience will prevail if you are a shareholder. So don't rush in, opportunity will be offered, but look at the roadmap which is provided between today and the actual listing day. So once you decide on all that, then you will be able to figure out what is a good value for all the businesses. Per se, Reliance as a combination, you have 4 companies to play now, indirectly or directly, and stay positive as an India consumer play.
2589. Is Nuresh there? Can we get Nuresh back up? Maybe in some time. But 2615. Kunal, so Reliance was this lazy, late mover. It came to the party late. But when Reliance comes to the party, it can really party hard because of the size and the presence it has on the Nifty. Now, this is 10% of the Nifty, which is Reliance. You got 14% of the Nifty, which is HDFC Bank and HDFC Limited. That's 24. You have 5% of the Nifty, which is ITC, which already is in some high octane drive. And then you got 7-8%, I think, is Infosys.
Yeah.
10 plus 14, 24 plus 5 plus 6 plus 30. 32% of the Nifty is looking good.
So TCS, add to that TCS and a few of the other names. So yeah, that makes
Hopefully in fee also.
Hopefully in 3 post results also. But I think for Reliance, in fact this move of demerger actually propelled the stock, because I think start of the July series the stock was at 2550 odd levels, and yesterday closing we were almost at 2850 mark, which means a 8% jump or a 9% jump for Reliance Industries in the last 10-15 odd days for the stock price. I think that propelled the stock or led to the stock moving into a much higher trend than what we were probably anticipating and expecting a couple of months back for Reliance Industries. But I think this is a good price discovery for the stock. It's come back above that 2,600 level post the demerger price for Jio Financial Services. So again, good positive for the stock.
Sushil bhai, I'll give you a very different thought and something which may just sink in with what you've been talking from last couple of quarters. Let's keep this special situation aside which created excitement and pent-up demand in Reliance. This event is over. But if I go back to the core business unfortunately, sir, is not in a fine fettle. Jio is just about there. Retail is growing, but nothing so great about it. And the old refinery business, which is the cash flow business for Reliance, is just about at par. Which means that now that the event trigger is out, do you think the upside in Reliance will get capped? And this was like a 1%, this was a one-time 5 to 7% move, which markets have got already, and Reliance will go back to its hibernation days.
So Nikunj, to answer your question, first the combination of retail buying in Reliance shares, which happened for exercising allotment of Jio Financial as a right. A short squeeze on the futures market would have happened because every buyer had to take delivery and the seller had to deliver. So in last 2-3 days, the position had to close. So between the futures market, there would be a short squeeze, and the discovery would have led to that 28.58 and closure of 28.41. Now you will have to break up each segment-wise business. Everybody is fearing that GRM and Reliance would be lower than the last quarter. But look at the diesel throughput which these people have managed with Russian crude supply and to Europe. Can there be a surprise? The gas discovery potential, if they announce that total discovery and what potential they have tied up with, based on the current consumption, how it's being sold, what value will be ascribed post the result. Jio ARPU may be lower than the competition, but their growth on numbers where subscriber is concerned and the kind of bundling they're doing with other packages, they had a good success in IPL. How much competition they take from others and how they grow, that is another thing to watch out. Retail, I'm quite sure now with financial support which comes to consumer, they will have a little higher penetration where they stand. So if there is a value around 25, 2600 and you have a 1 year outlook or a 6-month outlook, I think Reliance will do well. But if you think that short squeeze, which led for a 100, 200 rupee move between the retail frenzy as well as who wanted to buy Jio Financial, maybe over for a time being. But I think we need to have a fresh look after tomorrow's result and Monday when we come, how the outlook is given and the annual report is not out. So we need to watch how Reliance is going to talk about the new energy business where they want to start with polysilicon to solar module and then hydrogen. India is not a single company with solar polysilicon manufacturing. China dominates 95-97% of technology and production where polysilicon is concerned. The integration which Reliance will be able to do on solar to hydrogen, maybe only one other giant rival conglomerate can do it because they are also talking of polysilicon. Today's ET newspaper headline is talking about First Solar and the US delegation has spoken about it that India is able to export higher to US. So if Reliance is able to do captive consumption and have a local production, they have 10-15% higher markup on modules. Sending one container of polysilicon equals to 10 to 12 containers, 40-foot containers of module. So thing is that advantages may be in Reliance's hand, but only time will say. I am quite optimistic because it's an India consumer play. If you are expecting to compete with small caps and mid caps to perform, it can't happen. But within large caps, Reliance will remain a story which you'll have to take a view from 12 to 24 months.
Yep, and this is a long-term story. Sushil Choksi, always good to have you on the show. Thank you for taking the time out.
Thank you, Ash. Thank you.
Okay, that's Reliance in trade for you. Now you're seeing a big recovery, 32 points higher, 2,614, and it's a fresh all-time high on Reliance Industries. But in the thick of earnings, so let's address another set. We've got the earnings fine print out for Mtech. Let's chat with the management. We have Hiral Chandrana, the CEO, joining in on the show right now. Hiral, hi, morning. Good to have you on the show. Seems like the challenges in your core markets of UK and key accounts within the UK public services still persist. When is it that you do see a recovery coming in?
Thanks, Aisha, for having me on the show. Good morning. Maybe a quick recap of our Q1 results since we just announced it yesterday. We reported 20.2% year-on-year constant currency growth compared to last year. Our operating EBITDA is at 17.5%, comfortable, stable, healthy range. And our momentum in terms of pipeline and deals continues to be strong. In the UK, we have lesser number of working days, very specific to the UK this particular quarter in the Q1. So that's something that does impact us in terms of time and materials work. But we had a very strong order booking in the US. And looking ahead, we are optimistic about the prospects going forward for the remaining part of the year. So yeah, I'll sum it up saying that slow start, but looking strong and when it comes to remaining part of FY24.
Your cross-currency growth has been pretty volatile, right from 11% last year to 0.4% this quarter. So what's the outlook in terms of where you see it stabilizing? Do you think that double-digit growth can be seen in FY24, given that in FY23, the cross-currency rate was at about 18.5%?
Yeah, we definitely see that happening. And it's something that we feel confident in terms of beating the industry averages and going a little bit beyond. Market is still volatile. There are still, as you know, macroeconomic challenges. But our exposure to financial services is very minimal. And we also see that customers are asking us to step up and become more strategic, having a seat at the table in more strategic conversations. We've seen some marquee deal conversations where we were not on the table last year. So while there are some overall uncertain times, we're still very confident about the growth prospects. I mean, you heard about the acquisition that we announced yesterday as well. It's a key space that we've been looking at in the data cloud and data modernization space. We believe that's a additional capability that Mtech it'll help complete our overall story from front to back office. We're excited about that going forward as well.
The other thing I also wanted to talk about here was your margins, because they were soft this quarter despite not having a wage hike impact. When is it that you see the margins headed to the higher end of, say, 17 to 19% of a range?
Yeah, so Aisha, I mean, we actually did do a wage hike for one part of our business. This is the part of the business that we acquired last year. We wanted to maintain that cycle for that part of the business. So it was not a full Mtech-wide hike, but it was for that specific part of the business. So that did impact margins, but we offset that through some of the efficiencies. And this is the range that we feel comfortable, like you said, 17 to 19%. We're running 3 tracks, right? There is a growth track where we continue to make progress on account mining, larger transactions, looking at executing on our strategy, industry specific, market specific. But there's another track which is continuous optimization of our operating model. And that will continue to make sure that we operate more efficiently, deliver more efficiently, so that we can then move to the third track, which is fund and continue to fund new investment areas, including some non-linear platforms that we're building. Generative AI, as you know, has taken off in a big way, but we're taking a very practical approach of very industry-specific use cases, whether it's manufacturing, whether it's retail, whether it's combining now with the BizAnalytica acquisition, so that it forms a foundation to lead to more analytics and more predictive modeling.
What is the outlook when it comes to your internals? The DSO days have gone up, headcount is down. Do we take all of these indicators of ramp downs and renegotiations by the clients?
No, actually, we have a significant business in the Middle East, as you know, and that market does have some cycles when it comes to DSO and collections. Having said that, the team is doing a great job in making sure that we go account by account. In fact, we're being even selective on what accounts we work with in some of the geographies. So we believe that DSO will continue to go down, and it will help obviously margins and cash flows as well. But if you break up our overall business, our UK public sector, where we're still working in some very critical programs, digital identity, we just won a deal last week in the one login space, which is kind of equivalent to the Aadhaar card in India. We're working with the police protection program. We're working with borders and immigration. We continue to work with the health sector. So we feel that business will continue to be stable. Like I said earlier, our US business in terms of order booking has really picked up in the last few months. So we expect that to reflect in quarter-on-quarter revenue growth in the coming quarters, starting with Q2. And Middle East is a good kind of balancing act for us. It comes with some growth prospects, but it also comes with some margin challenges. We just had to sort of balance out the overall portfolio from that perspective.
Appreciate your time. Thank you so much for joining in and giving us that view. So as of now, confident about growth prospects, comfortably in the 17 to 19% margin range is what the Mtech management is confident of. The stock is well abuzz in today's trade at 22.17. Time for a very short break. Be right back. We've got lots more lined up, including corporate voices and market chatter.
Co-powered by Century Ply Club Prime.